What if I told you there's a completely legal way to pay zero? I mean absolutely zero. Taxes in retirement? This isn't some loophole for the super rich. It's a simple tool that most Americans have never been properly taught about, and it's called a Roth IRA. Understanding this one concept could genuinely change your financial future forever. So, let's break it down. What exactly is a Roth IRA? The letters stand for Individual Retirement Account. The key word here is Roth. Unlike other retirement accounts, a Roth IRA works in reverse. You invest money that you've already paid taxes on your regular paycheck money. That money then goes into the account, you invest it, and it grows completely 100% tax-free. When you finally retire and start taking that money out, guess what? No taxes. Not a single penny goes to the government. The simple idea is this: you pay your taxes now, so you can avoid taxes forever on all the growth. It's a powerful trade-off. Now, why is this so powerful? Let's get into the magic of tax-free growth. First, and most importantly, you pay no taxes on your gains. Imagine you invest $1,000 and over the years it grows to $10,000. In a normal investment account, you'd owe taxes on that $9,000 of profit. In a Roth IRA, you owe nothing. It's all yours. Second, with a Roth IRA, there are no required minimum distributions or R&Ds. With most other retirement accounts, like a 401k or a traditional IRA, the government forces you to start taking money out around age 73, whether you need it or not. Why? So they can finally tax it. But with a Roth, since the taxes were already paid, the government doesn't care. You can let that money grow for your entire lifetime if you want, and even pass it on to your heirs, who can also enjoy tax-free withdrawals. This gives you incredible control. Third, a Roth IRA is the perfect hedge against future tax increases. Let's be honest, does anyone think taxes are going to be lower in 20 or 30 years? Probably not. By paying your taxes now at today's rates, you lock in that rate and protect your future self from whatever tax hikes might come down the line. Over decades, this tax-free growth can literally save you tens or even hundreds of thousands of dollars. It's the difference between a good retirement and a great one. Okay, let's talk rules, but I'll keep it beginner-friendly. First, there's a limit to how much you can put in each year. For 2024, that limit is $7,000 or $8,000 if you're age 50 or older. This number tends to go up over time to adjust for inflation, so it's always a good idea to check the current IRS limits. Second, there are income limits. If you earn above a certain amount, the government restricts your ability to contribute directly to a Roth IRA. This is because it's designed to help middle-class savers. For 2024, if you're single and make over $161,000, you can't contribute. Again, these numbers change, so a quick search for Roth IRA income limits for the current year is all you need. And third, you must have earned income to contribute. This means money from a job or a side hustle. You can't just use gift money or investment income. The government wants to see that you're working and saving for your own retirement. These rules might seem a bit complicated, but they're actually pretty straightforward once you get started. A common question I get is, what's the difference between a Roth IRA, a 401k, and a traditional IRA? Let's clear this up. A Roth IRA, as we've discussed, is funded with after-tax money, meaning your withdrawals in retirement are tax-free. A traditional IRA is the opposite. You get a tax deduction now on your contributions, but you pay taxes on your withdrawals later in retirement. So, it's a choice: pay taxes now or pay taxes later. A 401k is different because it's an employer-sponsored plan. You can only get one through your job. Many companies offer a match, which is free money, and you should always take advantage of that. Some 401k plans even have a Roth option, which works just like a Roth IRA. But the main advantage of a Roth IRA on its own is the control and flexibility it gives you. You can open it with any brokerage you want and choose from thousands of investment options, whereas a 401k usually has a limited menu of funds. For beginners, the simplicity and power of the Roth IRA often make it the best place to start. Now, because the Roth IRA is so powerful, there are also some common mistakes people make that can really hold them back. Please avoid these. The first mistake is opening a Roth IRA, putting money in, and then doing nothing. A Roth IRA is not an investment itself, it's just the account, like a basket. You have to actually invest the money inside the account for it to grow. If you just leave it as cash, you're missing out on all the tax-free growth. The second mistake is withdrawing your earnings too early. You can always take out your original contributions without penalty. But if you take out the investment *gains* before age 59 and a half, you'll likely face taxes and a 10% penalty. This account is for retirement, so let it do its job. Another huge mistake is waiting until my income is higher to start. People think they need to be making a lot of money to open a Roth IRA. That is completely wrong. Time is your most valuable asset. Starting with just $50 or $100 a month in your 20s is infinitely more powerful than starting with $1,000 a month in your 40s. This leads to the biggest mistake of all, simply not starting. Procrastination is the #1 killer of wealth. Every single day you wait is a day your money isn't growing tax-free for you. So, how would you actually start? It's easier than you think. First, you choose a brokerage firm. Think of companies like Fidelity, Vanguard, or Charles Schwab. Opening an account online takes about 10 minutes. It's as easy as opening a bank account. Second, once the account is open, set up automatic contributions. This is the secret sauce. Decide on an amount you can comfortably invest each month, say $100 or $200, and have it automatically transferred from your checking account. This puts your savings on autopilot and builds the habit of consistency. Third, you need to invest the money. Don't get overwhelmed by choices. For 99% of beginners, the best options are simple, low-cost funds. You can choose a total stock market index fund, which lets you own a tiny piece of thousands of companies, or a target date fund. A target date fund automatically adjusts its risk level as you get closer to retirement. For example, if you plan to retire around the year 2060, you just buy a target date 2060 fund and you're done. Finally, and most importantly, stay consistent. Don't panic when the market goes down. Don't stop your automatic contributions. Just keep investing month after month, year after year. Remember, time and consistency are far more important than trying to be perfect or timing the market. You don't need to be a financial genius to build wealth with a Roth IRA. You just need to be patient. To wrap this all up, a Roth IRA isn't just another retirement account. It's a ticket to a tax-free future. It's one of the most powerful wealth-building tools available to the average American. The sooner you start, the more time your money has to grow into a life-changing amount. Start early, even if it's small. Stay consistent through good times and bad. And let the power of tax-free compound growth do the heavy lifting for you. Your future self will thank you for it. Thanks so much for watching. If you want more simple, honest money advice just like this, be sure to subscribe to the channel. We'll see you in the next video.